Hi everyone! We have another interesting episode here at GTV for you. I'm Ginger Arboleda.
And I'm EJ.
And we're content creators and startup business owners who love sharing our experiences on personal finance, investing, business, and parenthood.
Investing in crypto has become more popular recently. But before getting into it, financial vloggers often warn you that the crypto market is very volatile and only invest what you can afford to lose. So, we'll have to do just that. If you plan on investing in crypto, especially if you're new to the game, only invest on what you can afford to lose.
Right now, our crypto portfolio and NFT portfolio comprise 6.30% of our total portfolio, and for us, that's relatively fast considering we just got into it early 2021. We're pretty new investors in this space, so at first we were really shocked at how high and then low the market could get. It was really stressful for us seeing the numbers spike and dip the next day. But a year investing in crypto has taught us a lot, and we'd like to share what we have realized.
First, you should look at that instrument over the long term and see if it increases in value over the years. If it does, then that's a good sign that you'll probably earn long term on that investment. Let's take Bitcoin. Bitcoin was at around $1 in 2011. This year, it's at $41,000. Obviously, it rose over that long term. So, for us, that's a sign that over the long term, we may earn on Bitcoin. Now, Bitcoin is the cryptocurrency. Everything else is called an altcoin, and people invest in those in the hopes that they find one that's worth $1 now, but will be worth 41,000 later. Those are much riskier investments, and the method we're talking about may not necessarily work the best for those. Of course, it's gonna be up to you and your risk appetite if you still want to invest in that.
Now, how do you invest? So we advise that you use dollar cost averaging. Dollar cost averaging, DCA, or peso cost averaging in our case, is an investment strategy where you invest a specific amount into that investment vehicle in regular intervals. By doing this, you reduce the impact of the volatility on the overall purchase. You won't get the highest return, but you also won't be a victim of the lowest loss. That's because during the bear or down seasons, you're able to buy more with the money you invest. During the bull or up seasons, you're able to buy less, but the value of your overall portfolio is higher.
As an example, let's use a shorter time frame. Let's say on January 1, you bought $100 worth of token X at $10 per token. So that means you bought 10 tokens. Then on Feb 1, the prices dropped to just $5 per token. You still bought with $100, so you now have 20 tokens with February. Then on March 3, the prices increased to $20 per share. You still buy with $100, so now you have 5 tokens. Over that 3-month period, you have 35 tokens for $300.
Now imagine if you spent all that $300 in only one buy and not in regular intervals. If you spent $300 on January when tokens were at $10 per token, you would have had 30 tokens for $300. With dollar cost averaging, you have 35 tokens, so dollar cost averaging wins. If you spent $300 on February when tokens were at $5 per token, you would have had 60 tokens. In this case, investing all $300 would have been better. Now, let's say you spent $300 on March, you would have had 15 tokens only. So in that case, again, dollar cost averaging wins because you have 35 tokens. So yes, you don't get the highest return, but you are also not a victim of the lowest loss as well. If you're a person who's really good at technical analysis and really knows the instrument, you can probably find a time like February. But if you're like us and this is not your full-time job, you remove a lot of the risk by doing dollar cost averaging.
Next, do your own research and read about the token that you're investing in. Invest in tokens whose intent and purpose resonate with you. The cryptocurrencies will often have a website where they post their white paper. Read this and see if you believe in what they stand for and what their plans are. An example of this is we invested heavily on an NFT game called Axie Infinity. We did this because 1, as gamers, we enjoyed playing games. 2, we've seen that their team has so far consistently delivered on that promise. And 3, regardless if the tokens associated with the games go up or down in price, we'd probably still play the game. This tells us that their plan is not to turn a quick buck, but they're also looking at the long term, like we do.
Next, diversify. Diversification is basically spreading or splitting your investments across different vehicles so that your exposure to any one type of asset is limited. This will help reduce the volatility of your portfolio over time. So if most of your money is in crypto, consider also investing in non-crypto assets. If you're 100% in crypto, then at least invest in different coins and tokens. Personally, we have different investments spread across VULs, mutual funds, index funds, stocks, and crypto.
So one important thing to always remember is to have a plan and stick to it regardless of whether the market goes up or down. FOMO is real, and when you watch all the crypto bloggers saying buy this token and that NFT, it's easy to get swept by the hype and put in 100% of your budget on what they say. This is all speculation though, and no amount of well-done editing can make up for a loss that you'll just have to absorb. For crypto, our plan is to invest 90% of our budget on the coins and tokens that we have researched and we believed in, and 10% on new projects that we want to speculate in. So far, that method has worked for us. There have been some bad calls, but since we just invested 10%, they haven't been that painful.
In a nutshell, how to survive in a volatile crypto market is to have a plan, stick to the plan and don't get too emotional, continue to research and study, diversify, and if you're like us and this is not a full-time thing for you, think more long-term. If you like this video, please hit that like button, share, subscribe, and click on that notification bell for more videos like this.